Hi, good afternoon, everyone. This is Craig Rollings from Riveron. Welcome to all of our audience today for this week's Ask the Expert session. Today we're going to be discussing audit readiness and setting yourself up for success. With me in the room, I've got some technical accounting heavyweights. I feel like I'm sitting among the Ali, Foreman, and Holyfield of the accounting world, so this proves to be a very special session. Looking forward to this. I think just would like to walk through some introductions. I'd like to just allow the panel to introduce themselves and discuss some of their history. Michael, starting with you.
Good afternoon, Michael Cahill, Managing Director out of our Washington, D.C. office. I work with clients on new accounting standards, audit readiness, IPOs, and various other projects. I'm a former auditor, so I've got that in my bloods, and look forward to sharing a bit about what we do when we're helping clients get ready for first-time audits, an audit with a new auditor, or an audit after or before a transaction or an IPO. So looking forward to sharing a bit.
Thanks, Michael.
Hi, this is Matt Teffenhart. I'm a director out of our Chicago office. Similar to Michael, I spent a lot of time on technical accounting matters and assisting companies implementing the new standards, but also spent a lot of time with private companies newly acquired that are going through first-time audits or need audit cleanup. And hopefully we can give you some insight today on what we see and what are some best practices. There's no right or wrong answer here, but just trying to guide you in the right path. Right path, given we're coming up on year end and the audit season is going to be kicking off in full force.
Great.
Hi guys, Brad Webster here. I've had previous experience, probably about 8 years in the audit field, primarily working in South Africa and then making my way across the United States. So I've worked with US GAAP and IFRS standards. 2 years of my latest experience has been in consulting. Done quite a bit of work around mergers and acquisitions and restructurings, and a little bit of audit readiness. So yeah, I look forward to talking through the session with you guys.
Thanks, Brad. And just to introduce myself quickly, Craig Rollings, manager here at Riveron. Similar to Brad, some experience with IFRS previously, and now with US GAAP in the consulting field, and definitely the most unfortunate of the 4 pictures that are up on your screen now. Great. So I think just to walk through some housekeeping items, I just want to remind everyone you have joined this call on mute. Please feel free throughout the session at any point to either unmute yourself or use the Q&A section of Zoom to shoot over some questions. We'd love to hear from you throughout the session. Again, we've got some great technical accounting skill around the table, and definitely worthwhile to pick their brains during the session. A reminder that the webcast series that we have, Ask the Experts, past and future, we have quite a few upcoming as well. So just to review that on our website, there's some great content up there. And the CPE information that we've got here, just please understand that active participation is required for the duration of the call. And then to respond to 3 of the 4 polling questions that we have up, the on-demand video that is loaded after the fact, meaning this presentation will not be eligible for CPE. And yeah, we're looking forward to discussing. I think just a reminder, we also will be disseminating all of this information after the call. Just some of the learning objectives here. We're going to talk through how to improve your close process and leverage this for your audit readiness. Ultimately, key audit preparations during the audit lifecycle, how to improve the management of your audits. We know that there's always a significant lift for a controllership during that time. And then finally, the benefits of audit readiness. Okay, so I'm going to quickly kick off our first polling question, just to get everybody warmed up. So we're interested to know here, what creates the biggest issues during your audits. Very interested to know what the audience is going to say here, and just compare it with our panel here to see if they have similar feelings towards this and what they've seen in the past. Just give everyone a minute or so to answer. Brad, I'm actually interested to hear from you on this one in terms of which of the four, if not all of them, that you've seen in the past that have created these significant issues.
Yeah, good question, Craig. I'd say by looking at all of these, I think a lot of the time I've seen technical matters come up preliminary with my private clients. There's certain, transactions that unfold during the year, and not all of them are equipped to deal with technical matters. So sometimes it comes up later on in the audit when the audit team is actually doing some of the field work, and they're identifying some of these matters and, asking the client to address them. Some things like you think debt agreements, there might be embedded derivatives in there.
Yeah.
You might have equity arrangements through Series C. There might also be embedded derivatives there. And not everyone always addresses that up front, so you can run into issues later on in the game.
Okay, great. Thanks, Matt. Sorry, thanks, Brad. Excuse me. And now I'm just going to share some of the results. It's actually quite interesting. I think we've got kind of across the board here, the majority being kind of poor quality of the supporting documents. Matt, do you reckon this is consistent with what you've seen in the past as well?
Yeah, I was going to say that's not overly surprising. I mean, being an auditor in prior life as well for almost 12 years, you tend to deal with a lot of companies that they know what they're doing, they understand their operations. They may not have issues on the accounting side, but as an auditor, you need to be able to have the right support for the transactions you're testing and the data you're getting into, and they may not be readily available. You may not, have what you're thinking, or you may have what you think is good. The auditors may have a different viewpoint on it. And next couple of slides here, we're going to talk a little bit on the close process. I think that's one of the big areas that can improve your overall audit process. Is just getting a little bit better handle on what you're doing from a close perspective, trying to get out in front of what the auditors may be looking for, and ensuring that documentation is saved and everything ticks and ties out, so it's more of a handover package and the auditors can just kind of breeze through it.
Okay, fantastic. So thanks to everyone who answered the polling questions. Some interesting results there. Fantastic. So, handing over, Mr. Cahill.
Yes, thanks, Craig. And I think to add on to Matt's point about handing over sort of that completed package, or it's really about the preparation. You'll see that the themes we discussed today are based in preparation and really thoughtful consideration of any critical matters, whether they be risks that your auditors will assess, or their events, transaction, change in ownership or structure, but those, making sure beyond just the routine closing of the books and having adequate and thorough reconciliations, giving thoughtful consideration to your significant transactions is also helpful. So on this page, we highlight some of the challenges that your company may face. Some may be more relevant depending if you're a public company or a private company, private equity backed or founder and family-owned type businesses. So certainly, I think the timing of the audit after year-end stretches teams. So we'll discuss today managing the timing, trying to advance the timing with preliminary interim work to manage those deadlines, work around other transactions and competing priorities, working through the staffing issues we may have. I think a lot of companies, a lot of firms are challenged by getting the right headcount, and then within the context of the right headcount, having the right skill sets for that headcount. Accounting and audit matters continue to grow more and more complex, and the challenge of getting that type of individual that can handle the routine day-to-day accounting plus the technical matters is something that many companies wrestle with. And I think in the theme of preparation, talking about managing your audit, but managing your auditors, and therefore hopefully avoiding overruns or minimalizing overruns within the audit fees, something we'll touch on. And to the comment I made earlier about thoughtful consideration, I think if we're looking at those transactions or those events in our company's life cycles earlier, we're more likely to avoid adjustments or any type of control deficiencies that come out of the audit process. And then we touch on other areas such as, timing and PE or debt-driven covenants for the timing of the financial statements and meeting certain deadlines. But I think one of the fundamental elements to this is, having a solid and thorough close process. I think Matt will share a bit about the basics there.
So just touching a little bit on the close, and I don't want to say that this is going to solve audit issues or make the audit more or less non-existent. What this is going to do on the close process is it's going to improve a little bit of the relationship you have with the auditors, because they're not going to have to ask the same question over and over again, which tends to get draining on the audit side, but it also tends to drain, I know, on the company side as well. So having a lot of your monthly or if you do it annually, that year-end close buttoned up and you feel pretty good about what you're doing and the support and data that you're pulling together, it'll improve the audit process. At the same time, it also gives you a better feel for the financial statements that you're pulling together, and hopefully can make you sleep a little bit better at night. And just touching on some of the items on here, and I know public companies are required and they'll have the controls in place, and there's a lot of work that goes into those. Not always the case on the private side. One thing I would add here, though, is to the extent that you have some pretty complex areas where the auditors are going to spend a lot of time testing, making large sample sizes. I've got a few projects ongoing now where the auditors are picking anywhere from 200 to 500 samples per revenue line item. That's a significant amount of work for them to do, but it's double or triple on the company side, because you have to pull all the data, you have to make sure it all ties out before it even gets handed over. And there are ways to implement minor type controls in certain areas, maybe not for the entire company, but over certain processes to try to get the auditor to reduce some of their sample size. At the same time, it cleans up your close process and makes you feel good as things are progressing, because you have good processes in place. The one item on here, financial close solutions, it's not always in everybody's budget to implement something like a Blackline or other similar products, but what these do is they enhance your record keeping. They give a lot more of a one-stop shop for the auditors. You can do your account reconciliations in them, but there's so much more beyond that in terms of data flow. There's review levels that can be put in. It can automate some of your intercompany type activity and reconciliation. So there are aspects here beyond the people side that to make your close a little bit better, and at the same time, the auditors can get read-only type access to these solutions, and they can go in and attack the data on their own without you having to pull everything for them. And one last thing here, I think a lot of companies tend to struggle with, public and private, is on the reconciliation side. Account reconciliations, if they're done right and everything ties out, you have you have your underlying, call it subledger, and that's readily available, and it's ticked and tied to the general ledger, and to the extent that there are reconciling items, they're supportable and there's explanations for them. I think that tends to make the process go a lot better. It is a bit of a challenge, and sometimes these turn into just roll forwards on a monthly or annual basis, which aren't always the best. But if you spend a little bit of time cleaning up and reconciling at least the significant accounts, it'll make it a smoother process on the back end from the audit side, and also give you a better level of comfort that the data points that you have, your accounts are in pretty good shape rolling into year end.
I think Matt, just one point to add on sort of the close and the financial close solutions related around that. It's having a system or a tool that can help you with that. It doesn't only automate things, but I think a lot of times there's good intentions, and preparing reconciliations and closing monthly happens to different degrees. But I think if you have a system to automate as much of that as you can, then it's happening consistently and routinely on each month. Reconciliations have less of a tendency to get pushed, and then it frees up more of your team's time to focus on analyzing the data versus just going through and preparing the reconciliation. So there's more thought given into analyzing what the results are, what direction the business is going, and opportunities like that. So,
Michael, I think you touch on a point that I've heard you mention quite a few times with regards to the financial close solutions. It ultimately adds to a cost saving in the long run, because you're not adding extra staff to your accounting team to handle all of these heavy loads towards the year end. I know a lot of the black line optimization projects that we take on, although it's biting the bullet in the short term to make sure that you're going to get through a difficult close, once you've optimized the solution, it ultimately saves money on headcounts, not needing to take on extra bulk in your controllership.
Yeah, and I mean, to use a technical term, I think it's getting stuff done that you want to do that often gets slipped through the cracks and doesn't get done.
Yeah.
Yeah, I think, adding on to that too, on the accounting side, you get a little bit more into the analysis and what's going on, as opposed to trying to do the day-to-day data support, which, tends to get a little bit mundane, and, it's a needed and necessary exercise. The more that you can pull your team out of that and they can spend time reviewing and looking at what the results are and where the results are going, I think you get people a little more energized as well.
Yeah. From a leadership standpoint, I don't think you can put a price on that, actually.
So kind of moving into the next phase here, we're going to touch a little bit on what we kind of view or see as a simplified version of the overall audit cycle, and we'll get into the details of each section here.
Thanks, Matt. So essentially what we're trying to do here is we're trying to set the picture and get a good understanding of what all the phases are that entail an audit. And it's a good idea to understand what your auditors are doing at certain times during the audit, and how we can, as companies, get involved and consider certain factors and perform certain issues at certain times. So essentially what we have here is an audit lifecycle. So it all begins at the planning stage. So during the planning stage, essentially your auditors are going to be understanding the business. They'll be looking at risk assessment in terms of where the higher risk financial statement line items are and where they want to do more of their detailed testing. During this phase, they'll also be setting your materiality levels, and they'll be determining their audit strategy. So audit strategy is going to be around, are they going to focus on a control test approach or more of a substantive test approach? And that's all dependent on the quality of the controls and processes that are in place. Moving on from that, a lot of companies these days, they try and do a lot of interim work. So essentially, the auditors will come out before your year end, and they'll start doing some preliminary field work. It's always a great idea to get that done, because it assists in terms of the long term of the audit, and it helps in terms of cost savings and it's more efficient to get items addressed up front than later down the line when you've been pushed to your deadlines. The next phase of the audit life cycle is the preparation phase. So after the interim, your auditors, they leave the field and then they come out again, maybe briefly for a week, and they will, address their request list. So I know a lot of us refer to it as a PVC list. So they'll, from their initial planning phases, they'll go through the request list, and then during that time, the company will be preparing schedules and reconciliations appropriately in terms of that request list. And then the auditors will arrive back for their final audit execution phase. So during that phase, you'll get they'll make their final selections, they'll execute their field work, they'll make certain observations during that field work period, identify potential findings, and discuss certain recommendations that they've identified during that time frame. So majority of the work is actually done from a client side and from an audit standpoint during the final audit execution. So this is quite an important phase in terms of managing it going forward. And the final phase obviously is reporting and concluding. So here you'll obviously be delivering your financial statements and your footnotes to the financials. You'll be receiving audit findings and statements and discussing those with the auditors, and hopefully no control deficiencies, significant deficiencies, and material weaknesses, but those are generally when those are reported to the board and to management. So those are essentially the phases to an audit.
And I think, Brad, to add on to that, just an experience I had when I was an audit manager, senior manager, I had a client, we had a really difficult audit, and after the audit, the controller and I sat down. He was new that year, and quite frankly, we were disconnected. And he was leading his team and I was leading mine, and we sat down and hashed it out very candidly that neither one of us were satisfied, and thought through how we can handle it. And really, some of the themes we're going to share today are how we tackle that, and they're just practical, good communication, proactively thinking through issues and timelines, backing into when you need to start something if you've got a set timeline. But it's really, it was he and I communicating clearly and frequently on a weekly basis where we stood on the major issues, and drawing conclusions, not kicking the can, but really drawing the conclusions. So I think these, it's really about attacking the audit versus reacting to the audit that'll lead to success.
Just a question for the panel. I'm interested to know about the question about the interim audit stage. Does that really affect your ultimate cost of the audits annually? To add that in, possibly might decrease, possibly might increase, but does that have a major effect? Decreasing being interim audit being done, a lot of evidence collected earlier on, so it reduces the burden towards the annual audit.
Yeah, there's a slide in a couple here that address this a little bit, but just to quickly address that, what it does is it spreads the work out. When you get into that year end, call it January, February, March timeframe, a lot of the public companies are going through their audits. It's hard to get audit staff. The earlier you can spread it around, the less impact it has on your team as well, because you're not looking at somebody working a 40, 45-hour work week that needs to spend an additional 20 or 25 each week in January pulling data. They may not have as much going on in an August, September, October timeframe, or it's a little bit lighter. And in that case, they can tack on 5 samples here and there as they go, and it's not as big of a time crunch if it takes you 2 or 3 days. When you get into the really big year-end push, you don't have that amount of time or flexibility. So it's really just about spreading it, and by doing that, it's also, I think, a little bit less because the hours aren't as high on the audit side in interim. The requirements to work the hours aren't as much. They're a little bit lighter. I think they ramp up when you get into the year-end period.
Right.
And a lot of the audit firms aren't afraid to share that as well. They'll tell you that it's a little bit cheaper if they can do work early on and push it outside of that busy season time frame.
Yeah, it reduces the burden on them. Great. No, thanks, guys. That's some good insight. So, for everybody who currently might be thinking about baseball, wanted to throw you into our next polling question, just in case we need to bring you back in. So, going to launch this one. Just interested to know, throughout the audience, what is the spread? We're interested to know the spread of who the current auditors are. So I'm going to launch that now.
Yeah, and while everybody's answering, Craig, just throw out there, I mean, we've worked with a lot of these audit firms. You know, the processes tend to be fairly similar. There's a little bit of a difference on the methodologies that they undertake and the sampling sizes, but you know, in general, they're following a very similar pattern. So although you might be, you know, each client may have or company may have a different auditing firm, everybody I think is still going through the same pain points, dealing with the same issues and struggling. There isn't, I would say, one audit firm that, you know, does it better than the other. Not that they're all, you know, not that we're saying any of them are poor. It's just they have to do their work and get it done, and they have to sign that opinion to give you over your financial statements, and there's a lot at stake for them as well. So there is a good amount of work that they have to put in to get that done.
Oh, that's a good point. Thanks. Thanks, Matt. Just want to give a couple more seconds for everybody to answer. Okay, so let's just have a look. I think given the attendees, not too many surprises here. Most of the auditors do fall into other. Any comments from the panel on this?
No.
Okay. Great, so next, we're going to move on to discussing the planning phase of the audit, giving some insights into that.
Yeah, thanks, Craig. So during your planning stage, you know, there's certain things that you want to take into account. One of the biggest requests that we usually have from a company standpoint is asking for continuity in your audit team. That obviously helps in terms of, you know, your staff that you've previously worked with from the audit standpoint, having a good understanding of the business. You've got good relationships set up between your accounting and finance individuals with the team, and that they understand their testing approach, and you've kind of gone through things in the prior year, so it should be kind of continuous in terms of what their requests would be. However, there's certain circumstances where we're not always going to get continuity in our teams because there's a lot of turnover at audit firms. So as a result of that, you're going to have to, you know, figure out other ways of trying to keep things moving on a continuous basis. The one thing I'd recommend is, you know, in terms of your preparation of schedules and reconciliations, and keep that consistent, because a lot of auditors will be looking back at their prior year work papers and prior year schedules that have been prepared for them, and if it's consistent, it's a little bit easier for them to follow. And then, you know, with regards to interim and year-end, you might find, because of the public filers, your private companies might not have the same team from interim to year-end. It just depends on what the mix is. But when the guys come out and do their interim work, I'd highly recommend that you set up certain deliverables and certain objectives for the audit team to try and get through, and just press them through that. So when it comes time for the interim to be wrapped up, those items are addressed and they don't trickle into the year end when you have a new team and they're having to pick up some other items there. The other area I'd recommend during the planning phase is obviously to discuss your significant changes during the year at the company. It's always good to get these things on the table up front. So, you know, you might have a change in your accounting system. So there's demands there in terms of from audit teams what they're going to request in terms of their cut-off work, and, you know, they'll be looking at your revenue recognition, and just to make sure that your revenue from your one system is moving, you know, into the next system correctly. You might have had merger and acquisition activity. There's certain valuations that are going to have to be performed there, so obviously to discuss those with the auditors and make sure you've got your specialists on board. You may have significant contracts and transactions. Some of these contracts are probably worth discussing with the auditors up front because there may be a need for some technical memos to be prepared as a result of those transactions. And any change in accounting policies and estimates from one year to the next, this might, change some of their audit approach in terms of how they're going to be testing some of those sections. The other important part of planning is obviously to try and put on the table early the technical matters that the company is going to be addressing. Auditors can help you in terms of providing you in the right direction to go and find that guidance. That's always very helpful. Instead of trying to find it yourself, they can actually advise you in terms of where to go and find that guidance, and then the management will come up with the appropriate response to it. Also to discuss new applicable guidance and pronouncements. So is there anything new that you should be aware of? The auditors deal with this day in, day out. They're very up to speed in terms of what new pronouncements are out there and how it could affect your company. Good to get that on the table as well. And then the other area is obviously change in your company personnel. As a result of that, it also is an important part to the planning phase to get comfortable with the new individuals that are on the company side and introducing them to the audit team so they know who they need to talk with as a result of any changes in personnel.
Brad, I just want to touch on one thing that you mentioned here, talking about any kind of new applicable guidance or pronouncements, especially with regards to 606 and 842. That's where we've seen a lot of very successful implementations as far as the year-end audit goes, particularly with 606, where you've had very early on interaction with your auditor, been upfront, and discussed all of the matters around the guidance and got them on board with a lot of the policies and decisions that you've made. So that's something we've seen a huge amount lately with the changes, wholesale changes that were made with 842 and 606. So I just wanted to highlight that.
Yeah, I guess, Craig, to add to that, I would say if 606 isn't done yet and you're a private company, it's not too late to get out in front of it and get it wrapped up. As you start thinking ahead into the 842 cycle, it's probably good to start having those discussions now, engaging the auditors to the extent that you have a pretty decent or large portfolio of leases. These are areas that everybody's known about for a while. The auditors have a lot of experience going through the public cycle on auditing the implementations. I think, coming out of some of what we see on the public side, there's still challenges to deal with. So the earlier that's taken care of and the earlier you get engaged from an audit side, the better for everybody.
Great. Yeah, and I guess the last point I have on, the planning phase is obviously specialists. You're going to be engaging specialists to do certain parts of, which will be included in parts of the audit. Obviously, you'll have your tax specialist that's going to be doing your tax provision. You may have done some acquisitions during the year, or you might have to value some of your equity or goodwill and tangible asset impairments. So you'll have a valuation specialist involved there. And also, if you have any pension plans, you might have to get an actuary involved. So it's always good to get these things going early on and engage these specialists to do the various items of work that you're going to need them to do, and obviously introduce them to your auditors as well, because they're going to be quite a significant part, and there's going to be a lot of communications between the two parties. So always good to get your specialists on board early. And then I guess after the planning phase, we kind of move into your interim phase, where you'd request your auditors to come on site and to start some preliminary field work. And I'm going to hand over to Matt. He's going to walk us through the interim audit phase.
So this slide kind of highlights a little bit of what Craig had asked about earlier in the discussion. The interim phase, the more that gets done, the better, obviously, for everybody. But some things that we've seen on projects I've seen on the audit side, some releases that have been out there as well. The more that you can spread your workload throughout the year, the better for your teams. I think that's one of the big things here that the audit does is it just, not only is it a drain for the auditors, but it tends to drain your internal staff as well. And spreading the time out is beneficial just to kind of keep the morale up a little bit and hopefully alleviate some of that stress and pressure that people feel. The bottom one here, I think, is important too, early detection of issues. This is really key when you have a significant event or transaction during the year, the implementation of a new standard, those types of activities getting taken care of early in the year, getting them out of the way, addressing any of the pain points before you get to your year end and before the auditors get in and do their final audit work is better because you can address issues and make the corrections. You can book your entries as needed. It's not a mad rush at the end, and then you're not forced to try to flush it through as a topside entry and get it into the financial statements and have to do all that reticking and tying. So that if you get it in before your books close, it just makes the process smoother for everyone.
And Matt, we got a question that's just come through here asking about which party is it that initiates an interim audit discussion? Is it the client or is it the auditor?
That's a good question. I think before I had left auditing, we were starting to push those conversations just because we were seeing the burn on our teams as they're working 70, 80, 90 hours during the busy season time frame. But I think as a company, there's no reason why you can't have that conversation and see if there's work. And this next slide that we'll pull up touches a little bit on areas we've seen as successful interim accounts tested. But get out in front of that. You can be proactive with the auditors. You're not necessarily telling them what to do, but it's kind of guiding the schedule a little bit and seeing if there are things they can do, get out of the way early on to help them out, but really alleviate the time crunch on your side.
Right, so thanks for the question.
Yeah, and something I'd like to add on that too, Matt, just regards to, certain things that, last year you might have had a pretty easy year. You didn't have any significant transactions, you didn't have any acquisitions or divestitures or however, in the current year, you might have some bigger transactions that are going through, and from a company standpoint, you should probably be aware that that's going to require a lot more audit hours to get through those items.
Yep.
So then I think during that period, you should be trying to address this during interim and, approaching your auditors and advising them early on that we've done, 3 acquisitions in the last 3 months. We're going to need you guys to come out and try and address it because of the tight deadline that we're going to have next year.
That's right.
That might also drive an interim communication with your auditors.
Yeah. Okay. Oh, thanks, guys.
So I'm not going to spend a lot of time on this, but these are some areas that we've seen successful accounts tested during an interim cycle. And this is not a one-size-fits-all. This is really going to be dependent on what your business is, what your cycle is throughout the year. And if Q4 is where things really ramp up for you, you're more of a seasonal business, thinking retail during the holiday times. Some of these accounts may not be as easy to test early on, but yeah. We've seen additions and disposals of PP&E. I think regardless of the company, you can test for, call it 7, 8 months, 9 months of the year and get it out of the way because there's not going to be a lot of change there as you get to year end. Deferred revenues, especially if you're in a SaaS type environment on the software side, when you have annual or if you have 1, 2, 3-year contracts, especially ones that start earlier on in the year, a lot of those tend to have a prepayment and then they'll be amortized out. The auditors can get their arms around your schedule and how you track that and monitor that on a go-forward basis through early testing. And then, equity transactions that occur early in the period, they don't really impact necessarily what's going to happen later on, so those can get tested as well. The one area that I think is really successful from an interim time frame, though, is the income statement. A good amount of the income statement can get tested at an interim period before you roll into your year-end testing. And that's, especially if you're in a no control reliance audit, there's a lot of detailed testing that goes on there. And the more that you get those samples out of the way early on, the better for you on the back end. This is an area where I've seen a lot recently, and we're still dealing with this, that, you know, the auditors are trying to test at an interim period, get as much as they can done through December, and they're, you know, what they'll do is they'll just break their sampling size up. I think, you know, getting back to Craig's question and what you can do and drive at an interim, here's an area where you can sit down with the auditors, see what makes sense to them from a testing perspective, see what you guys can pull together on your end and push it forward.
Yeah. Great. Thanks, Matt. Right, so next one, just talking through the audit prep stage.
Yeah, so after the interim work, your auditors are going to want to do some preparation for the year-end field work. Some of the key considerations to consider here, you know, they're going to be delivering to the company a request list, and on that request list, you'll be a variety of different items that you can, I'd recommend that you sit down with your team internally and discuss amongst the team as to who would be best assigned to address those requests. And then they're going to be putting dates on there in terms of deliverables. So those dates are pretty important because it's a tracking mechanism in terms of, you know, have you given us this by a certain date, and then the question comes down the line, you know, with overruns and stuff. You guys gave us like 2 weeks later than what we expected. So
it gets contentious. Yeah.
So just make sure that those dates are set reasonably in terms of what the company can expect to deliver, and obviously sit down with your auditors and discuss with them those dates. And then if there's anything in there in terms of requests that are a little bit different to the last year and you're not too sure, get clear communication from them in terms of what they're expecting to see from you. The other big one you'll see on top of all these audit request lists is your trial balance. So that's usually right at the top of the list, and there's a good reason for that. But the auditors will need that. If they're doing substantive testing, they're going to be needing that to set their planning materiality off that, so they can start making selections. And they usually do that through a statistical and non-statistical method, and materiality is a key driver in that. And they will obtain their materiality from those trial balances that you're going to provide them with, and to identify what accounts they're going to want to make selections from. And then as you start preparing these schedules, just make sure that the team is, you know, reconciling everything to the trial balance. The auditors won't start testing anything unless it is complete, the information that's been provided. So if it doesn't tie to the actual trial balance that's been provided, they're going to push that back around to the client and ask them to, you know, reconcile before they can even make any selections. So again, slow down the process. And then, you know, during this phase, you know, obtain status updates with your specialists, you know, introduce your auditors to your specialists, communicate deliverables, set up, you know, lines of good communication, key dates of deliverables. So get all those out on the table and work towards those with the various parties.
I think just to add a point there, I think setting out the clear, you know, lines of communication, but probably adding someone to really own that as a PM, just because the specialist that we're leveraging with evaluation or the tax specialist, in addition to the specialist within the firm, it's a lot of different schedules to coordinate, and things can slip through the cracks. I think having someone that's, you know, on the audit team managing that to make sure that those timelines are laid out and the deliverables are being delivered timely and followed up with is critical. That's an area where the specialists can really bog down the audit timeline.
Totally agree. Great.
Great, thank you. Thanks for that insight, Michael. Okay, so we're going to move on quickly to the next polling question. Interested to know, how long does your typical fiscal year audit take? Just going to give folks a few seconds to answer that.
And this is more the duration of the audit itself, not the period after year end, but really once it starts.
Yeah, once they descend, how long are they?
You get your financial statements issued.
Okay, thank you very much, everyone. Just having a look at these results. Yeah, I think this is very much within expectations. I think greater than 3 months, pending some significant reasons, that is an extended period of time that I'm sure adds a lot of cost and stress onto a controllership.
Yeah, I think we'd all like to be in that first bucket.
Yeah, right. I know when I was a controller, that was never the case, being in the first bucket, but okay, well, thank you very much. Okay, moving on to the execution phase.
Yeah, so during the execution phase, the key part of the audit in terms of getting a lot of the work done requires a lot of time from both parties. The one thing that we always want to try and do is stick to our delivery dates, because when you set up planning, it's set up to meet those delivery dates to get you comfortably to your audit deliverable date, or when your covenants, audit requirements have to be met. So sticking to those planned dates are good. And the way in which you can keep this moving quite smoothly is setting up a regular weekly meeting, both with your internal team and your auditors. From an internal standpoint, you'd want to identify the individuals that have been assigned certain deliverables and when they are expecting to deliver those, and are they on point to do it. And if they're running into any issues, you can help resolve and provide solutions to them. And then when you sit down with your auditors, also on a weekly basis, include the audit partner, the manager, the entire team. You can bring your staff in as well, and hold good communications with them in terms of going through that request list. What are the issues? What are the holdbacks? What is happening on their side? But then also make your auditors accountable in terms of where they are in terms of testing. Sometimes I've found on some of my private clients that the auditors will only start addressing, the audit managers and partners only start getting through their review later on in the game. And that's when a lot of the technical stuff gets identified. So if you can have your auditors also present to you their status, I think it'll be a great communication between the two parties. The other one, the second last point here, ensure clear and concise messaging to the auditor. Sometimes you'll go and grab a lunch with the audit team, and you'll discuss, maybe something on one of the matters like an estimate or a judgment, and you'll say, this is kind of what we've done to put this together. And your auditors over lunch might just say, you know what, that sounds great. It sounds like you guys have done exactly what we needed. So at that point you think, oh no, we've done everything, we're good, yeah, we can tick the box. Meanwhile, a week down the line, they start looking into it, and then they're like, well, we're going to need to interview your sales guys because we're looking at the commission estimate. We're going to have to, see some sales commission contracts. We need to look at your forecasts. So clear communications and understanding certain matters should be ideal. And then obviously continuously deliver on audit sample requests to maintain momentum of this process. And that's on the next slide. I kind of want to highlight, audit sampling is essentially the main way in which your auditors will achieve their substantive testing. And this is a long process. So it's always good to understand what these guys are doing and how they're getting to the end and what the holdups can be. So essentially in the beginning, they'll be setting the materiality to set their sample size. They'll be asking for a detail of one of the trial balance accounts, and then they'll be making their selections. And then after those selections, you guys are going to have to go and pull everything and then get those selections over to them. Then they're going to have to obviously test those selections, and as a result of that, there might be documentation issues. There might be, errors. So they're going to have to quantify those errors. And if the quantification of errors is of a certain magnitude, they may have to get the team to go out and make additional selections again. So it's a long-winded process. So the key point here is just to keep the teams moving to deliver during that period of time. And the other point here is, you can see during this process that the errors are only quantified at the latter stage of the process. So you might go through this entire ladder of delivering everything, and then these guys are going to be asking to make additional selections. So very key point in terms of your audit fieldwork.
Yeah, I think this is a good one just to quickly touch on, I think, Brad, a lot of times we forget about all of the steps in this process, and this is where, you know, having maybe a little bit of a better close process and having all that documentation pulled together assists here, because when the selections are made, it's all readily available and you can easily pull and provide it.
Great. And then just moving on to conclusion.
Yeah, so I think on the conclusion phase, you know, we've got highlighted some themes here, and it's really setting those dates and those deliverables and then sticking to those. But I think just in consideration of time, let's just skip to the next one.
Yeah, I think this is the meat and potatoes of what people are interested in hearing.
Yeah, and I think, you know, really it starts with leadership. And, you know, if you're in a public company setting, you've clearly got that message, right? You've got a CEO and a CFO that are going to present the earnings results to the market, and that data is established early. So everyone is invested in working towards that same goal. If you're in a private company, a PE-backed company, you've got goals and, you know, covenant deadlines to meet your financials, but there may be less support from the leadership if it's a founder-run business that doesn't have a high value on the audit or the financial statements, and they're really focused on the mission and the business and ops side. You can have some challenges there with leadership. So good leadership, I think, is core. And from there, you get to the underlying principles of accountability, ownership, right? So if you look at setting expectations, we know what we're going to have to do. We're going to have to support the amounts in our financial statements, looking at those, reviewing our balance sheet, our P&Ls, assigning those areas to the different personnel within our accounting teams, and then holding them accountable, right? We're going to review that schedule. When are you going to be done with this reconciliation or this memo or this analysis to support our financial statements? From there, we'll receive a PBC list from the auditors. Again, going through that, thoughtfully assigning those areas and those components to our teams, you know, reasonably and appropriately assessing their skill sets and their, you know, time capabilities to figure out who can handle those areas, staying connected to that, making sure that they're accountable, making sure that they're delivering. Avoiding that multiple touch by the auditors. One of the biggest inefficiencies is when the auditor has to pick something up, touch it multiple times. They're already going through layers of reviews within their audit process, but when an audit senior or an audit manager has to pick up a memo multiple times, it really bogs down the process. So just trying to avoid those things. And then I think communication. I think I mentioned that example of an audit where I had, you know, gone poorly one year, and the controller and I really synced up, and I had a much better audit the next year. Communication is critical. And I think it's communicating internally, and I'm a fan of the 15-minute meeting where everyone goes around the room and highlights, you know, what their, you know, successes, what their challenges are, and then we'll have a follow-up meeting on those challenge areas so we can focus on anything that's going to put our timeline or our deliverables at risk, and then meeting with the auditor on that routine and getting the investment from them. And then leveraging your stakeholders, whether it be an executive or your PE sponsor. Sometimes we need to apply some pressure to the auditors so they understand the urgency that we have, and share that sense of getting that audit completed by a certain timeline. The audit standards are not easy, and they're not getting easier, so there's a lot of requirements on auditors, so we're sensitive to that, but still we have to get to the conclusion and issue the financial statement. So I think, again, I mentioned this earlier, it's really attacking the audit. It's our financial statements that are getting issued. So owning it and having that mindset from the beginning is critical to a successful audit.
Quick wrap up here, and maybe, Craig, in interest of time, we go to the next slide just to let the polling question up for those that may need to.
Let's do that quickly. So folks, just want to wrap up with the polling question. We'll go back to that slide. But just interested to know quickly, you know, how would you like to better prepare for your year-end audits? You know, what are the areas that you'd like to focus on?
Yeah, I guess I can touch on the previous slide while we're going through the polling here. A lot of the benefits we've addressed throughout the conversation here. You know, one of the big ones, and everybody's always interested in, is the cost side. So to the extent that you can pull things forward and improve the overall structure and reduce the cost, I think that's obviously a big benefit. But you know, one of the ones that we tend to forget about, I think, is the staffing impact. And the more that we can spread out the overall process for us as well as the auditors, I think the better it is on the people, and the more that we can put them into positions where they're doing a little bit more of an engaging activity on the analytics side, or digging into the operations and not just the general accounting work.
Yeah. I think not a huge surprise here that technical matters are going to be addressed as one of the highlights. So thanks to everyone who answered that polling question, but I think that's pretty much in line with expectations that we'll see a good distribution, but you know, technical matters being at the top of the list.
Yeah, I think that's one we tend to forget about. You know, you're so deep in an activity or a transaction during the year, you just forget that this is going to have to get audited on the back end. So it's just one of those we're just going to have to kind of continue to remind ourselves to pull that forward.
Yeah, thanks, Matt. We have perhaps maybe 30 seconds for this slide, and then it's wrap-up time. Matt, if you want to quickly run through this one.
Yeah, you know, I touched a little bit on these already. I think the big thing to remember, and we all have to keep in mind, is, you know, you're going through your audit for a reason. Either you're public and it's required for the filing, you're private, you have debt, or some other reason for the audit. Yeah, we just need to work together with the auditors and get it done. You know, everybody has their struggles. All companies struggle through it. The auditors have their frustrations. You have your frustrations. So the more collaborative you are with them, I think the better the outcome is on the back end.
Great, thank you, Matt. With that, we have reached our time. We really appreciate everybody joining. We understand how valuable everybody's time is. If you have any questions following this, we will be sending out some contact information. Please feel free to reach out to any of our experts. With that, enjoy the rest of the afternoon. Thank you, everybody. Thanks.
Yeah, thank you very much, everyone.